Good afternoon. Welcome to GrainTV. My name's Cody Bills. This is Logan Burgess. Today is Thursday the 5th. We had the market trading sharply lower here. Corn for July trading down 7 1/4 cents. Soybeans down 22 cents. And wheat in Chicago off 8 3/4 at 6.05 3/4. Logan, we did have export sales out this morning, but I don't think that was the main driver. People talking a little bit more about weather. What was the main item that moved us lower?
Yeah, it seems like one thing that was really leading this grain market lower was predictions out today from the Climate Prediction Center, now putting it at a 70% chance of seeing an El Nino event here this summer. In general, El Nino seasons would tend to produce cool growing conditions and above average precipitation. And as you can see here from this chart provided by Iowa State University, looking over the last 100 years or so, there's a pretty strong relationship between El Nino events and national corn yield. So obviously, considering how good this crop is, looking here at the moment, and now we have some more long-range projections, not helping out the price of new crop corn today. Seemed like a similar situation for soybeans as well. Really a lot of weakness across the board looking at the new crop.
Absolutely, and when you look at this compared to really where the crop has started, you know, we're off to a great start.
Yep.
We've had precipitation for most of the wheat plantings, for the most part, all wrapped up. You know, Logan, we're looking at this drought monitor here, Iowa and Missouri, and then, of course, that western part of Illinois. What are your thoughts on that?
Yeah, you know, in general right now, the Corn Belt is off to an exceptional start. So I don't think that this announcement today from the Climate Prediction Center is a huge game changer. There are some areas that could use some additional precipitation. As you said, western Iowa, west central Illinois, but from talking to grain hedge clients, even in west central Illinois, out in western Iowa, it sounds like they could use the moisture, but in general, corn stands are looking very good. Some of the best that they've seen here in the last couple of years. So overwhelming theme right now for this corn crop is that things are looking very good. The next big question and one wild card that the bulls are going to be looking at now is obviously acreage. We're going to be getting an update on that here at the end of the month from the USDA.
Absolutely. So short-term and long-term weather forecasts seem to be positive, but of course that's putting pressure on the markets.
Right.
Let's turn our attention here to export sales. One thing to note is that wheat only came out with 2,000 metric tons of old crop sales. That was on the lower side of analysts' expectations. You know, after this long fall in prices, they were expecting that perhaps that would have triggered some more sales. Unfortunately, that was not the case. I think one thing we got to keep in mind, though, is that this export sales report is last week's sales. This week, we continued to shed price off of that wheat contract, and we're now approaching that $6 mark, more in line with the Black Sea region, more competitive on the global market. So perhaps next week we will see a pickup in export sales. One thing to note, though, for traders is that, you know, you may be looking at this wheat contract, which has been trading down so sharply. You know, if you're thinking of shorting it now, I would be a little cautious here as we are approaching that $6 big hole number. Oftentimes that will provide some support. Oftentimes, especially at the end or after we get overextended in a sell-off, if you touch on those $6, sometimes you get a quick bounce. And so just a warning out there for anyone thinking of shorting this far down in the hole. Logan, export sales for soybeans were also kind of interesting here. What's your thoughts there?
You know, relatively light week in terms of sales on the new crop. Not a lot to talk about there. Really quite disappointing sales, and I don't think that was helping out anything in terms of the November soybean contract today. But I think the real story in terms of soybean export sales is what we're seeing on the old crop right now. Take a look at this chart. This shows weekly sales here are the blue bars. The red line is the pace needed to meet USDA expectations, and then the green line here is how the accumulated sales are looking compared to that pace needed to meet USDA expectations. You can see here we're still well ahead of USDA expectations. Our models are showing the current pace of sales about 100 million bushels ahead. So obviously that creates a situation where the USDA may need to make a revision to export sales. We are getting a USDA report on June 11th, so that's going to be one time where traders are going to be looking for the USDA to make revisions to export sales. The big issue, though, right now for old crop beans is that there's only 130 million bushels projected in total ending stock, so there's not a lot of excess beans here to go to the export side of the balance sheet. could be an interesting report there on June 11th. We'll help keep you posted on expectations for that and a more detailed breakdown of export sale projections as we approach that report next week.
That sounds fair enough, Logan. That guy wraps up today's show. If you have any questions, give us a call at 877-472-4607. Remember, you can take a demo of the mobile trading platform and the desktop platform at grainhedge.com. Thanks a lot for tuning in. We'll see you here Friday for the weekly wrap-up.